Hi everyone, my name is Yogi, and in this video I'm going to be talking to you about bucket strategy for investments. What is the bucket strategy, why it is important for financial independence, and how do you build a bucket strategy? And what better place to talk to you about this bucket strategy than this fascinating abandoned town here in California, which was developed during the Wild West days of the late 1800s, when the gold rush was at its prime. And I think within 50 years, this town was abandoned. I guess the people in this town, their bucket strategy was a little different. So their strategy was collect as much gold in the bucket and then scoot from here. Our strategy is going to be a little bit different here. So back to the topic. So what is bucket strategy? Bucket strategy is basically taking your investment portfolio and distributing it or staggering it in a way that it distributes your risks over a period of time. So essentially, you have what we call investment bucket for now, for your investment needs for soon, and investment needs for later. So it's essentially a 3-bucket strategy. So your short-term goals, your mid-term goals, and your long-term goals. Typically, the short-term bucket or the short-term investment goals are where you have the lowest risk, or where you want lowest risk and maximum liquidity. So this is most of the time cash, the savings in your bank account, short-term fixed deposits. The short-term bucket is for a 2-year horizon, most of the times is rule of thumb. Then you have your investment needs for sooner, which is your midterm bucket strategy. And in that midterm is where you have, I would say, a little bit of risk, but also investments that give you some sort of income. And they are, I would say, not easily liquidatable, but partially if need be. So these are, in my view, your ETFs, your blue chip growth stocks, your dividend paying stocks, your I would say midterm fixed deposits. And then you have the long-term bucket strategy, which is investments for later. And in the long term, you have investments that are really where you have tech stocks or anything that is where you expect a long-term growth, be it your real estate and the things like real estate, or in this town here, gold, which is, I would say, not easily accessible in liquidity, but it has a lot more potential and growth on long term. So the short term is for around 2 years. The midterm bucket is around 3 to 5 years, and your long-term bucket is for 5 years plus beyond horizon. Now, why this 3 buckets strategy is important for investments? Reason number one, that it makes you a lot more resilient for any market downturns. So whenever there is a market downturn, you have around 2 years of cash access in some form of liquidity that you can use for riding through this downturn. On the flip side, if there is an upswing in the market, it also gives you the flexibility to maybe cash out some of your long-term investments and rebalance it into your short-term bucket or the medium-term bucket. So this is how you are a lot more resilient and not really emotionally tied to the market upswings and the downswings. Reason number two is that it creates a culture of having different types of investments in your portfolio. Because, for example, if you only have real estate in your portfolio and your portfolio is totally asset heavy, then it kind of, when you look or through the bucket strategy lens, then you can say, hey, that's all for long term. I don't have anything for short term or medium term. Similarly, on the other side of the spectrum, if you have all your investments in form of cash, then you know that everything is needed for you. You got a lot of liquidity, but you do not have a lot more growth or risk options that you have for long term. So that's the reason number two. Reason number three, as obvious, that it distributes your risks over a time period. It also distributes your portfolio over a time period. So this helps you towards your financial independence. So these are some of the reasons that help you by having this bucket strategy towards your financial independence. Now, how do you go about it? So simple steps. The first step is to really take a check or stock check of your entire portfolio. See what kind of assets you have, then plot it against the type of returns that you get from those assets and the risk profile of those assets. So real estate will have a different risk profile. Stocks, your RSUs, may have a different risk profile. Your cash in the bank will have a different risk profile. So take a stock check and see where you are in terms of your total investment portfolio, and is your investment portfolio more or less within these three buckets. The second thing is, once you've done that, then you need to see that how do you distribute this over the three buckets. How you do that is you need to see, for example, if you're in your 20s to 30s, then typically you would want 6 months of a time period of cash available with you. So that's your runway. I talk a lot about this in another video of mine where I give the different stages towards financial independence, and this is where your stage number one is. If you're in your 30s to 40s, you would want anywhere between 1 to 2 years of runway available of cash. So that means your short-term bucket should make sure that it is as a minimum that is there. And if you're above 40, then you should definitely have 2 years plus of liquidity in some form or that less risk bucket available. So this helps you to say that, okay, if I've done a complete check of my portfolio, how do I rebalance my investments over this portfolio, and how do I go about it? And like in the journey to financial independence, the buckets also will need to be rebalanced over a period of time. So if you are going in the 30s, as I said, you'll have probably less in the short-term bucket and a more in the long-term bucket. And the more you are going towards, let's say in your 40s, your 50s, or towards retirement, like we have done as an early retirement, your short-term bucket will be at least as a minimum 2 years. In our case, we've tried to make it even much more resilient by having it around 3 years. So that depends on you. So this is a quick video to just give you what the bucket strategy is, why it is important, and how do you go building it. I hope this helps you towards your journey to financial independence. If you have any questions, please feel to reach out. And anyways, do like, subscribe this video, and saying bye from this interestingly ghost town of Bodie in California. Bye.